Hello students, the topic of the day is the accounting for managerial decisions. That is the MCO 5 and it is in the second semester of IGNO, Masters of Commerce. So we are going to discuss here few blocks are there. In the first block, we have to discuss the fundamentals of accounting. In fundamental of accounting, here we are having 4 units. Unit 1 is about accounting and overview. Unit 2, that is the basic cost concept. Unit 3 is the financial statements. And Unit 4, understanding financial statements. Moving further, now coming to the Unit 1. And here in the Unit 1, we will discuss today the introduction, need for accounting, then definition of accounting, functions of accounting, parties or the user groups interested in accounting information. Use of accounting information, branches of accounting. Here we are having modern as well as the traditional approaches and the accounting concepts. Accounting concepts at recording stage and further it is at reporting stage. Then last, accounting standards. So that is all the theoretical concepts. And here in the theoretical concepts, I will try my level best to correlate each and every concept with the relevant example. And the example along with the theoretical clarity that is most important. So I would like to make the presentation as far as each and every concept is concerned a brief, little bit brief. Now coming to the first unit, accounting and overview. You people are from the Masters of Commerce and you know better what accounting is. So here I am mentioning here the quote given by the Warren Buffett. Everybody is aware who Warren Buffett is. Now, coming to the point, in business, numerous transactions take place. In a business, there are a number of transactions on a daily basis. Let's see if I would like to visit McDonald's, then you will be able to see number of customers are there. And what the people are doing? They are doing the transactions. And it is very difficult to retain each and every transaction in human memory. That's why we require some system. And the particular system is known as accounting. Accounting helps to maintain the records and it helps the businessman to keep the records for a long period of time. Now the electronic devices are available and it's not a big job. You people can easily get all the information. Hard drives are available, memory disks are available. So accounting is about the language of business. Now what Warren Buffett said, accounting is the language of business. If you can't speak the language, it is difficult to win the game. Rightly said. Because you know better, we must understand the language where we people are going to deal with. So here we are having, as far as the accounting is concerned, accounting is about, जिसको हम briefly कहते हैं, that is about profit and loss account and financial position, the balance sheet. It talks about the financial position at a given period of time that we will discuss later. Now, what is the need for accounting? Accounting is for number one, recording of transactions. Number of transactions we people are dealing with, then we have to record each and every transaction here. Second one is the determination of profit and loss account. So undoubtedly, we want to know either we are in profit or in loss. If we are running a company, a firm, a proprietor business, a partnership business, or a company, so either we are in profit or loss. Only accounting is the way or the method that helps us to find or ascertain either we are in profit or loss. Third one is the depiction of financial position. It depicts the financial position at a given period of time. Legal requirement, as you know better, as per the Companies Act 2013 or the Income Tax Act law and different laws or the governing laws in our country, it is the legal requirement to maintain the accounts or to further publish it. Publish it, it means the reporting. Then the preparation of tax returns. Every year, or the companies are also paying the advance tax. So that's why they have to maintain the records. Accounting is must required because with the help of accounting, we will able to find the tax calculation or the tax we paid last year and what advance tax we would like to pay this year. Then effective control over the business. If you want to have a good control over the business, you must have the record, historical data. Then you can do the apply number of techniques like ratio, like trend. With the trend, you will be able to understand either the business is going in the right direction or not, where the lacunas are, where we people are lacking. And next one is providing information to interested or associated party. Many user groups, number of parties are interested, externals or the internals in the business. They want to know where we are. Like when people would like to see what is going there in the economy, just we refer the newspaper or the news channels. And with this, we people are able to see what is going in, what is happening in the economy. That's why when we refer the published accounts of the business, then we will be able to understand the true and the fair position of the business. And we can refer each and every aspect that is given in the accounting information or accounting records. Now, coming to the definition of accounting. Accounting is the process of identifying, measuring, communicating economic information to permit informed judgments and decisions by users of the information that we already discussed. It is about identifying that we will discuss further as far as the process of accounting is concerned, how we are going to identify the different aspects of the transaction and how to classify, how to summarize it. That is about the process of accounting that is given by the American Accounting Association. Now, that is the point that I would like to discuss. Functions of accounting. Here, identifying financial transaction. Number of financial transactions are there. Few are on cash, few are on credit. If I would like to summarize or would like to make a difference between them, that is, few are the revenue items, few are the related with the cost and expenditure. And undoubtedly, I have to record. Being a businessman, being an accountant, recording of financial transaction is must, because without recording, we are not able to understand. Then the classification of the transaction. We have to classify the transaction, then we will be able to make a clear-cut distinction between revenue and the capital items, expenditure versus cost, assets versus liabilities. The next one is summarizing the transaction that we people do generally in the trial balance, and then analyzing and interpretation of result. After having the records, analysis is must required. And there are a number of techniques that we will further discuss in the block 3, where we will deal with the financial management accounting part, and then interpretation of result. Number of tools and techniques are available that will help to interpret the results. And further, the most important part is after having the recording and all the uh, management accounting aspects, the communication to the user groups. There are the 8 user group I have mentioned here. I'm referring strictly your book. The book is issued by the IGNO. So the PPTs are from that particular book to make a good correlation between the theoretical or the hard material given to you people and what I am discussing right now. It is the owners, you know better, than the prospective investors, the investor, those would like to be the part of the company, lenders and the bankers, creditors, managers, employees, regulatory bodies, and researchers, those who are in the research work. Now, coming to the parties interested in accounting information, that is discussed in detail here with the brief note of the each and every aspect. Owners and shareholders, where the people are interested. They are interested in evaluation of business run by them. Undoubtedly, what I am doing, I would like to see either I am in success or failure. So profit and loss account, that will tell better the story, and the valuation of business not on a yearly basis, not on a half yearly basis, it's on daily basis. That's why even the reporting is right now mandatory on a quarterly basis also. Then second one is the prospective investors. Let's say I would like to invest in the company like Tata. Tata is very good company. And there are a number of companies in Tata Group like Tata Capital, Tata Motors, Tata Steel. So if I would like to refer the balance sheet of Tata Steel, then I would like to see interested in buying the share of the company. So first of all, I have to see the book value of the company. So where is the actual or the intrinsic value of the share? That I can calculate only with the help of accounting information available. Then the lenders, those who lend money to the company, they would like to see the liquidity position, solvency position, and the debt service quality. Undoubtedly, because they have given the money and they are interested, either company is able to pay the installment or finally the principal amount at the time of maturity. Creditors. Creditors will give money to the company or advances to the company only when they will be able to see the credit worthiness of the company, the goodwill of the company is, or the image of the company is good in the market. Now coming to the fifth, managers, those who are in the functional management of the company like planning, controlling and decision making and data. Undoubtedly, it's must required to have the kind of the business planning and controlling at the end. And after having the controlling, undoubtedly the decision making process starts. Implies, let's see, if I am the employee of a company like Reliance, then I would like to see as far as the job satisfaction and the financial aspects and are concerned, how safe am I? So how safe am I? That is the employees, and the employees, how safe they are in the organization is about that we can check through the accounting information. Regulatory bodies, taxation, securities, company laws, the people are interested to find where they are, where the company is, as far as the mandatory information is supposed to be furnished with the regulatory bodies. Researchers, those who are in the research, they would like to have the projects and they are the PhDs or other kind of the sponsored projects. They would like to see the accounting information or the information available in the public domain. And right now, yeah, all the aspects, all the information related with the related with the company, that is easily available from various websites. Number of databases are working for the same, and you can get easily, the access is very easy to get the financial information. Now coming to use of accounting information, that is very important. Here you can see how do user use accounting information, that is more relevant. Apart from having information, as I discussed with you people, information is available. There is no second thought on that. Let's see, if I would like to Google, then there are number of websites are available. And even from the website of the company itself, you will be able to find the accounting records or the published or the annual reports of last 10, 15, 20 years. It's not a big deal. And here, first of all, it's important, managerial planning and control. For managerial planning and control, the information is very much important. So then we will be able to do the planning in a better way. You must have the raw material with you. Then the internal performance evaluation, which segment of the company is doing good, where we people are lacking, either the cost or the expenditure of the company is going up, and where we are lacking in terms of sales or in terms of other revenues, or where is the operational profit, where is the net profit. That is all about the internal performance evaluation. Managerial decision making, that is linked with the previous point, and external financial reporting. After having recording or having all the records audited by, prepared by the CAs, then we have to present it to our user groups. So undoubtedly, it's all up to the user group how they people are going to analyze or interpret. It's your own viewpoint. It varies from person to person. But undoubtedly, there may be some difference. But if the company is there in loss, then no one can say the company is doing good. But how to convert company into a good unit, a sick company revival, that is possible only when we are having the data with us. This one is very important, branches of accounting. Earlier, there were the only traditional aspect. Now, the modern accounting practices also evolved few new terms in the accounting. Earlier, that was the financial accounting, management accounting, and the cost accounting. But right now, we are having human resource accounting, social accounting, price level accounting, national accounting, tax accounting, green accounting, creative accounting, and forensic accounting. See, so there are number forensic accounting. And I'm not going into detail here because in years syllabi there is only the traditional accounting aspects. And as far as the forensic accounting, like it's you can see it's somewhat sounding like what is forensic? Like the way the scams or the scandals are cropping up in the market or in the companies, then there is a need of the forensic accounting. The forensic accounting help us to find who is the culprit behind, who is the person behind the kind of scam, because that is the public money, that is the money of the investor, and the few persons, they are just enjoying the public money. And the forensic accounting, that is very important right now. So but now I'm coming back to the traditional part only. So in traditional part, number one is the financial accounting. Financial accounting deals in what? Identifying, you know better, recording, classifying, summarizing, and communication for financial information. Financial information for what? It's profit and loss account, known as the income statement, and the balance sheet, also known as the position statement. And then another one statement, cash flow statement, prepared as per accounting standard 3 revised, is also mandatory to publish. Apart from that, there are number of reports that you people can see in the published account of a company. I would like to suggest you people here that kindly have a look of an annual report of any company you would like to. Like Navratnas, you can get sale, bail, then ONGC itself. The published accounts are very good. You will be able to understand in a better way, because in the next unit there is the topic financial statements and financial statement analysis. Analysis one can do only when someone is having a kind of a understanding of how to prepare the financial statements. So just have a look. That is very important. It will also ease the work of uh, this subject also, because it is for the managerial decisions, accounting for managerial decisions. And accounting for managerial decision is what? It is about how a manager is going to deal with the accounting concepts. And that is my sincere advice to you people. Kindly download any annual report of a company, a good company, and read it thoroughly. Then you will be able to understand it in a better way, or it will help you to understand the another branches of accounting very well. Now the cost accounting part B. It is the another important aspect of the accounting, and also the specialized branch. Like CAs are required, ICAI, you know better, and similarly for cost accounting, ICWA. And it is the accounting for cost. It is accounting for the expenditure based upon costing principles. Like here we can also see the cost accounting standards. For what? To get or to control cost associated with the product, a job, and a service, a business you are dealing with. So there are a number of, you can say, aspect here we people would like to discuss in the cost accounting part. But that is the task of unit 2. Functions of cost accounting. Here, just have a brief look on that. Cost classification, either the cost is direct, then direct cost, indirect cost, the cost is either fixed, variable, semi-variable. There are number of classifications are there in the cost concept. And second one, the estimation of cost for tenders. Like for quotations, if we people are dealing in, then we have to calculate the cost. And estimation of cost depends upon this one. So cost tenders and cost quotations. Ascertainment of cost. Ascertainment of cost, if you would like to find the cost of a product, a service, or a unit, then the cost accounting methods will help you. And further, the cost reduction, cost control to overcome the problem of wastages. And undoubtedly, when you people are able to find the cost of production, actual cost of production or cost of sale, then you will be able to add here the handsome margin into that, and that will help you to find the selling price. And selling price is very much helpful for the price determination or pricing policy of the company. Facilitating preparation of financial statement. Undoubtedly, financial statements are somewhat based upon the cost records also. Not somewhat, it's largely depends upon the cost accounting concepts. That will help you a lot to further prepare the financial statements. The C part, or the next branch, or the last in the traditional system, is management accounting. Management accounting is the accounting by management. It is the internal affair of the company. And here I would like to refer the definition given by R.N. Anthony. Management accounting is concerned with the accounting information that is useful to management, because management is the party who is governing the entire business. And for budgeting, forecasting, planning, problem solving, decision making, and to know what is the cause of rising cost and what is going to be the effect of that on the operating profit, and what is the impact of the kind of this rising cost on the uh, external parties or the shares, that is again a matter of concern. And all the matters or all the issues is deliberately discussed and you can say tackled by the management via management accounting only. Role of management accounting, it is for the efficient planning, undoubtedly, increasing efficiency to the business operations. Control means what point I'm going to discuss, I think you have already discussed, or you can say covered the points in the book of management or organization behavior. Because what management accounting is, it is the affair of the management. That's why the similar points are covered here in the management accounting part. To increase the labor efficiency, to achieve management efficiency, help in management functions, and further communicating, because to have a kind of a good, uh, you can say the coordination between all the departments. There are a number of departments in the company like production, sales, purchase, finance department, R&D department. To having the kind of a good relation with all the departments, the kind of information flow is must required. Then we will be able to understand where the problem lying and what are the probable solution to tackle the kind of the situation. Now, after having the discussion with the all the theoretical concepts, it is little bit practical. And here I would like to uh, just summarize the accounting process, and it is also known as the accounting cycle. First of all, recording the transaction. If you are going to record a single transaction, it must be supported by the source document. Source document, we have to convert it into the vouchers, and then the journal will come. Journal is the day book. That is the first, you can say, the step in the accounting process. Second one is the classifying the transactions. Classifying the transaction, after having the journal or the day book, we have to segregate the accounts. Like in journal, there are a number of entries. Some are related with the purchase, some are related with the sales, and cash, bank, related with the expenditure, incomes. Here we have to make it separate. Like you know better, you are the commerce graduates. Ledgers is about the sales ledger, purchase ledger, uh, salary, rent. So each and every account we have to segregate here. And after having the segregation, the balances of the ledger, that will be able to help us to prepare our trial balance. Trial balance divides the entire balances into two parts. One is debit, another one is the credit. And after having the trial balance, then the process is a little bit convenience to prepare trading profit and loss account balance sheet that are known as the final accounts. and the final accounts are prepared. That these all accounts are prepared by the chartered accountant in the company and then audited by the external person. External person is the auditor, who is also required to be or must be qualified CA. And then after having the audited records, the next job of the company is to communicate, or that is also known as reporting. First one is the recording, another one is the reporting. And now these records are supposed to report to the 8 user groups that we have discussed as per your book in the previous slide. Okay, that was the end of the uh, this part, accounting concepts. Now accounting equation. Accounting equation, as I divided the trial balance into two parts. One is the debit side, another one is the credit side. Similarly, in the balance sheet, you people are able to see one side is the asset side, the other one is the liability side. Here, the blue circle, it represents the total assets. And total asset is equal to the liabilities, total liabilities. And total liabilities further divided into two parts. Liability is external, orange part, plus capital. That is also the liability, but this is the liability of the company for its owner only. So the money invested by the owner itself, it is known as the capital or equity. So total assets is equal to total liabilities, that is also external plus internal. And then here the cursor is liability is equal to total assets minus capital. So if you want to find liabilities, so this is, you can, I'm shuffling the equation, and you people are, it is the, you can say, the task of the fundamental elementary accounting or the bookkeeping that we have covered in this syllabi of +1 or +2. So not discussing much here in detail. Coming to the example part, here liability side it is 7,25,000, asset side it is 7,25,000. It means total assets are equal to the total liabilities, and further segregating total assets into liability plus capital. And the capital here, you people are able to see, it is 4 lakh rupees money invested by the owner itself, and rest are the external liabilities. External liabilities are again, further you can divide into two parts: long-term liabilities or the short-term liabilities, known are as non-current liabilities and current liabilities. The second last concept is the accounting concepts itself. What accounting concepts are? Accounting is purely based upon accounting concepts. uh, Accounting concepts are what? These are the business language to make the business language simple, meaningful, understandable, uniform, and comparable. If we want to have, like in grammar, sorry, in English, grammar is there. Grammar is for what? Grammar is having certain rules, certain principles. With these certain principles and rules, we people are able to draft a sentence. And the beauty of the sentence lies upon the use of correct vocabulary as well as the grammar used. Similarly, accounting standards make the accounting information or the reporting simple, meaningful, understandable, uniform, and comparable. So these are the accounting concepts. In the books, accounting concepts are also known as the postulates, underlying principles, basic assumptions, and conventions. Going to discuss here the accounting concepts in detail. First of all, concepts to be observed at recording stage. First one is the business entity concept. Business entity concept means the business is treated as separate entity from its owner. Ratan Tata, who is the, the managing director of the Tata Group, and you can say even the owner of the Tata Group, we can't mix Ratan Tata with the Tata itself, because the personal issues that need not to come into the business, and that's why the two concepts are very important here: the capital and rank. Money invested by the owner in the business is known as capital, or any money withdrawn by the owner from the business is known as the drawings. Second one is the money measurement concept, like to measure the each and every transaction we must have certain standards. So here is the money is the standard. We have to record each and every transaction monetary terms. And for example, like in India, we record the transaction in Indian rupee. So that is the money measurement concept. Next one is the objective evidence concept. What it says, for this purpose, all accounting transactions should be evidence and supported by documents. As mentioned in the accounting cycle or accounting function concept, each and every business transaction must be supported by the source document, then followed by the vouchers, and then there is the day book. And the examples are here: invoices, receipts, cash memos, etc. For example, transaction of credit purchase must be supported by invoice, and the transaction of cash purchases must be supported by cash memo. Next one is the historical record concept. The historical record concept, what it says, only those or events or transactions need to be recorded which already happened. No future event is to be recorded here, like which is already being taken place in the business, that we have to record. Like land purchased by Tata as on 25th May 2021, that we have to record in our books. So this is, it means that we have to maintain the records on the basis of the transaction that already been covered by the business. Fifth one is the cost concept. According to the cost concept, each and every transaction is to be recorded at its cost. Means, let's see, it's the actual value. So if a machinery or any asset is acquired by the businessman at a given point of a time, whatsoever the value of acquisition is to be going to be recorded in the books, irrespective of its market value. If an asset is required at 1 lakh, then it's to be recorded at that amount only. Here I'm not considering the market value, only the value of acquisition, the true value, whatsoever the value I have paid to buy the particular asset. Dual aspect concept, as we people are dealing with the double entry system. So according to this concept, each debit has its own credit, and each and every transaction in business is having a twofold effect. Land purchased by Tata Limited here is what the people are doing. They are acquiring land. So debit what comes in, and for that they are paying cash. And here credit what goes out. So the rule of real account is working here, because it is the real account. As far as if you are paying rent, so rent to cash, rent is here the nominal account, comes under nominal account because it is the expense and we have to debit all the expenses and losses. So the way we have to deal with the dual aspect concept. Now, the next one is concept to be observed at reporting stage. First one is going concern concept. What they are assuming here. According to this concept, it is assumed that the organization will continue its business for an indefinite period. If we are going to start our business, it's for not a 1 or 2 years, for an indefinite period. If it is for a temporary basis, 3 to 4 years, then you can say it is a temporary partnership, it's a temporary business, or it comes under the definition of joint venture if 2 or more parties are having a kind of strategic alliance here. Gallet watches company is doing business since 1450. It's, you can say, 5 to 600 years. The company is doing business for last 5 to 600 years. So it is in their mind that they have to flourish their business. They have to do the business for a number of years to come. So that is the going concern concept. On that basis, we people will be able to grow our business. Second one is the accounting period concept. It means that we have to record the transaction for a certain period, which starts from the 1st April and ends at the 31st March. Right now, it's the 1st April 2021 to 31st March 2022 is the particular accounting or a financial year for this period. And it is further divided into two parts, first half and second half, and 4 quarters, Q1, Q2, Q3, and Q4. Third point is matching concept. According to this concept, the perfect match of cost is the revenue, and for or to ascertain the profit or loss, what we have to do, we have to match our expenditure with our revenue. Like interest received is one side is our income, and interest paid is on other side is our expenditure. One is on the credit side and another one is on the debit side. Conservation concept, it is a prudent concept also. What it talks about, they are saying we have to record the profit in the books of account only when the actual realization will come. And for losses, we have to make the provisions for probable losses or expected losses. We have to create the provisions, like the provisions for bad debts or doubtful debt we generally create in our books of accounts. Now, next one is the consistency concept. What consistency concept is? Consistency concept deals with the preparing the financial statements in a consistent manner. Means we have to follow the same methods. Like if we are using the straight line method in our depreciation accounting, then we have to follow it until or unless a change is must required. Then we will be able to make a change, but that must be in the knowledge of the regulatory bodies also, or the user group. Full disclosure concept, all the material concept, all the relevant information is supposed to be reported or communicated, that is required. So Companies Act, what they are looking for, they want to have a true and fair view of the state and affairs, and that will come only when we are going to disclose all the relevant and the material facts. Materiality concept is the number 7th. It is further the extension of the full disclosure. What it means, it is about to inform the investors or the user group all the relevant and important information. For example, change in the method of stock valuation is very much relevant, very much important to communicate to the user group also. Next one is the accounting standards. Accounting standard is the set of rules, procedures, what is they are required to make accounting more useful. So international accounting standards, international financial reporting standard, framed by International Accounting Standard Board at international level, is known as the accounting standard. And in India, uh, as per the Companies Act 2013, Section 211, subsection 3A, profit and loss and balance sheet is supposed to be maintained as per the records, or sorry, as per the standards or the benchmark standards given by the Institute of Chartered Accountants of India, ICAI. And a few examples are accounting standard 3, that is for cash flow statement, accounting standard 6, it's for depreciation accounting, and accounting standard 14, accounting for amalgamation. Next one is the objectives of accounting standards. Objective of accounting standard is to harmonize the diverse accounting practices. There are so many accounting practices followed in different countries, but here we have to make a consensus between all the accounting practices. That is possible with the help of accounting standards only, to ensure transparency, consistency, adequacy, comparability, and reliability of information contents, and to serve the varied needs of user groups, as we discussed in detail earlier, and to make accounting information more useful and meaningful, that is must required, and to improve overall quality of presentation and reporting. That will come only when we have certain standards here. So that is the end of the unit 1. With this, you can be able to understand the overview of accounting. So in the overview of accounting, we discussed the few concepts accounting, accounting functions, standards, and concepts. And that will help you to understand the basics or the fundamentals of accounting. With this, I would like to close this session, or my sincere advice to you people is that kindly have a look on the terminal question, MCQs, or the long essay type questions that is given in the back of your unit 1, and it will help very much helpful for you students to understand, or to have a good concept clarity, and that you people will further showcase in your examination. Best of all to the students for the coming examinations, for the coming exams. Have a nice day. Thank you. Thanks very much.